Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to talk about something very interesting that's kind of come into stock trading vernacular right now. Everybody's starting to talk about it a little bit, which was unheard of about a week ago as far as thinking about it, which is learning how to short sell stocks. It's a foreign concept to most people. Most people, quite honestly, should only be looking to buy stocks, but we're not in a normal world right now. We're in a world where everybody's home, literally, and trading stocks, whether it's day trading, swing trading, everybody's watching the markets right now. Everybody's concerned about what's going on in the big picture. And now that the market has crashed for a couple of days, at least the question is being brought up right now is what is short selling? How do I short sell stocks? And what should I look at for if I want to short sell stocks? So we're going to cover what is short selling, what are the actual mechanics of what happens when you short sell? And then we're going to take a look at the scenarios from minimum criteria to looking for a short sale, all the way up to where you might start to build an argument for a better short sale. Now, I want to say short selling is not for everybody. I happened to actually learn it as soon as I started trading way back in April of 2000, which is over 20 years ago now, because we just came out of the dot-com boom. And all stocks were pretty much starting that new bear market that lasted for pretty much until March of 2003. So I learned how to short sell right away. I'm going to show you how to do it today. We're going to have a little PowerPoint presentation to start it out, and then hopefully you can take a look at some opportunities as well. If you find these videos helpful, definitely click down and subscribe. That would mean the world to me, and you'll learn every day new stock picks as well as lessons just like this. If you want to trade together in real time, click down and learn more about the 30-day bootcamp. I think you'll find it to be a great investment. So we're going to head over to the charts. We're going to do a screen sharing here. And let's first do our fancy PowerPoint presentation. So we discussed this actually last night in our group coaching call, but we're going to go over it again. So a lot of confusion in short selling is actually how do I make money short selling, and how do I sell something that I don't own? So like say, for example, you want to short sell Amazon, just for as an example, or Tesla, which has gotten crushed over the last week or so. How do I make money while stocks are going down? So we're going to talk about first how you actually get paid. So we're going to start out with something that we all understand that's simple, is if you buy a stock at 20 and you sell it at 30, you earn the difference of $10. That's very simple, right? Everybody understands that. Short selling is actually the same thing, just a different entry and exit, meaning you start the sale first and then you buy it back later. So if you short sell a stock because you believe it's going lower, you short it at $30 and you buy it at 20, you earn the difference of $10. So it's the same trade, except you're initiating the sale first instead of the buy first. So now we're going to actually talk about what happens. How can you actually short sell a stock if you don't own that stock already? Okay. So when you short sell, you are expecting the price of a stock to go lower. So again, let's make sure the mindset is correct of what exactly we're doing, similar to buying a put. So when you buy a put, you're actually looking for that security to go lower. Or maybe you bought Microsoft, for argument's sake, and now it's moved a whole bunch in your favor. Maybe it's sitting at all-time highs right now, and you expect it to go higher, but you want to protect the downside. So you buy a put so that if it goes down, you're making money on the put, and that's compensating as much as possible for what you might be losing if the stock turns around. So when you short sell, you're expecting the price to go lower. To sell short, now here's the part that's a little bit confusing that we need to really drill home, and I think we can do it right now. You're borrowing stock from your broker dealer's inventory. Now sometimes what happens is you go and try and short sell a stock, you might see a message that says hard to borrow, and that's what we have over here. Hard to borrow means that they don't have enough shares available for everyone who wants to short sell a stock at that moment. If you happen to be able to short it, that means that you got the shares that were available at that moment, which could change an hour from now if those shares go back into inventory, which could happen if the stock starts to rally and everybody's doing what they call covering, which we're going to discuss in a second. So to exit a short sale, you cover the trade by buying it back. So if you sell something, you have to buy it. The same way if you buy it, you have to sell it. So you sell it short, and as it's moving lower, you buy it back. And the trading terminology, the trading lingo, is that you cover the trade by buying it back. The shares go back into your broker's inventory. So before we actually get into a couple of charts, we just want to make sure we talk about that in a little bit of detail. So you buy it here first, and then you sell it. That's the most common terminology. Everybody knows buy low, sell high, right? So to sell short a stock, you short sell it up here, assuming it's up here, and you're thinking it's going lower. So you short sell it here, and if and when it moves in your favor and goes lower, you buy it back. So the terminology when you buy back a short sale is you're covering it. So I'm sure you've heard the rally, which we've had the conversation, we've actually had it recently, which is a short covering rally. So a lot of people are trying to like, what's the difference between it's going up? That's all I care about. But why are people saying it's a short covering rally? A short covering rally implies we had a move to the downside, and then people who are getting out of the short sale, which we just said you have to cover and buy it back to get out. A lot of people are buying at the same time, so that causes a fast spike. So that's why short covering rallies are typically fast. And a lot of people are getting out quickly because they're short, and now they feel like they're in a rush to get out. There's really no other way to say it. So they have to start buying quickly, and that's why short covering rallies typically fast. You might have to watch this one or two times, but it's kind of exciting to learn. Now, the downside to short selling is very similar to selling options premium. If you do what's called naked, is that you have unlimited risk on a short sale because the stock could technically go up to infinity, right? The positive side of short selling, if there is a positive side, that means stocks are going down or whatever you happen to be trading is going down, is typically, as we just saw in the market, so this is a really good example, is that shorts and moves to the downside typically happen much faster. And if you think about the psychology behind it, it's because buying, you can buy in pieces as it's moving higher and everything's okay. When people believe the tide is changing, you take action much quicker. So the action is being taken in a much shorter period of time because if something happens, if something is going on or price reaches or crosses a significant reference point, a lot of people look at the same thing. So they eventually become self-fulfilling prophecies. So when people have to sell to get out of trades, it starts to go down very, very quickly. So if it goes from a selling opportunity to a short selling opportunity, those could move relatively quick. And literally, as we saw in the last few days in the market, when short selling comes into the market, or selling in general, but short selling especially, when the conditions are right for short selling, it goes down relatively quick. Now, I want to make it clear, the market sell-off that we just had the last few days, that wasn't a short selling opportunity. I'll explain. We're actually going to take a look at some charts right now, and I'll explain the circumstances, because what's important is knowing when should I short sell. Lance in our community yesterday asked a couple of good questions about that. So we're actually going to head back over to the charts, and we're going to take a look at when and the minimum criteria to short sell. So we're actually going to start out looking at moving averages. So on the chart here, we have the three most common moving averages. We have the 20-period moving average, the 50-period moving average, and the 200. So prime circumstances to buy, so we're going to start out with buying because it's always easier to go that way first, is when the 20 is above the 50 and the 50 is above the 200, and all of them are rising. So the 200 is kind of flat right now, and that's mostly because of the pandemic. We'll take a look at a couple of other stocks that were screaming to the upside. So when that happens and price is above, those are the better opportunities to be looking for stocks to buy. So naturally, that means on the opposite side of that is when the 20 is below the 50 and the 50 is below the 200, that sets up a scenario where you would consider short selling. So because of how strong the market's been, it's been very hard to find anything that matched the criteria. But you can see over here, the 20 is below the 50 and the 50 is below the 200. So in this circumstance here, again, not perfect circumstance, but that is the criteria because we want the 200 to be sloping down. So I guess you could say in this window here, it was, but because of the pandemic and the fast rally, despite the fact that the 200 is pointing down, you can see prices are actually rallying already. So the key here is there's perfect circumstances, and then there's circumstances that are more natural price action, which is what we have over here. This was the result of the pandemic, and you can see it rallied very quickly. So it's very important to know the difference between It just happens to be below versus they're actually trending. So in this case here, VLO, the 20 is trending down, the 50 is trending down, and the 200 is trending down. So this particular scenario would be a better scenario to be looking for a sell short, because right now, all of the different time frames, all of the different market participants are selling stock, and that's why all the key moving averages are in the right order, and they are moving to the downside. So what we want to do now is we're very quickly going to remove any of the indicators that we have on the chart, and we are now going to go over to the SPY again. And we're going to take a look at, first we're going to take a look at the opening price for day traders. So day traders are going to say, when do I short sell? The absolute minimum criteria for a short sell is if intraday your price is below the first print of the day. And in the boot camp, we know that as the opening price. So this is the first opening price of the day. So we draw that line, and you can see for the rest of the day, price was below that, and that would be the very, very minimum criteria to look for a short sale. And I say minimum, I'm talking about you're in there day trading, okay? So if you go back to the day before, which was over here, you can see that for the most part, on September 2nd, prices were above the opening price, so you would not be looking to sell short. So now we're going to do what most people would say, we're going to add, we're going to build to that argument, right? So now the minimum criteria would be you're not only below the opening price, but you're also below the previous day's low, and you're also below the previous day's close. So you start to build an argument now. The more different time frames that make selling obvious, the more different time frames that selling is going on, you start to build an argument where, okay, day traded, right now price is low, the last 2 days price is low, the last week price is, and you start to build that argument. So if we go over to the weekly chart, you can see that the argument with just yesterday's price action has now increased the argument where it's below the previous low, below the weekly open, below the previous close. But you can see for the previous 9 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, there was no argument on the weekly chart to short sell. And if you go to the daily chart, you'll see that there was 1, 2, 3, 4, 5, 6, 7, 8 days in a row where there was buying opportunities, 1 day of indecision, and then 2 more days of buying. So you can start to see how you put the argument together for looking for a short sale. This day came out of nowhere. Many believe it was way overdue, which I'm one of them. So then the next day, if this particular day, if you were an experienced active trader, you could have possibly looked for a short sale. But here's the thing that I want to get across. That was not the right trade for all of July and all of August, because stocks were going up with a vengeance, and only looking for a spot to buy was the smart trade and the right trade. Now, the last couple of days, the market's been selling off with a vengeance. It looks like we're actually trading a little bit higher in the futures right now. So it's still not necessarily the best trade in the world. And I'll point out what I mean by that right now. If we bring those moving averages back into the SPY, you can see that the SPY, despite how fast the market sold off, the moving averages are still in bullish order. The 20s above the 50 and the 50s above the 200. So it's not a perfect sell short opportunity. So you see, this is really where trading experience comes in, and this is really where struggling chart readers have a problem, because they're like, no, it's going down now, I have to jump in and I have to sell it short. It's still not the greatest idea in the world. It's something that you could consider if you're an active trader and just looking to take advantage of that most immediate move. But in the long run, that's not the best idea until you have perfect conditions on the higher time frames, the same way we've had perfect conditions buying stock all the way up since March. So a lot to consider here, right? But this is what separates somebody who struggles from somebody who gets paid. Watch this video a few times. There's a lot going on in here, and I really think that once you take some notes and get into it, I think you're really going to be excited about learning a whole different side of the market. Have a great day, everybody.